Hello and welcome to another update video about Bitcoin. Today, markets rather moving sideways. They pretty much have been moving sideways since we hit the low. Yeah, here that low on the 18th of June. So markets are moving sideways and we are currently observing if we could have something bullish going on here. So I'm going to show you first the bullish scenario, which is very clearly not my primary expectation at the moment. I'm still leaning towards another lower low below that 17.5, 17.6k level where we made the low here on the 19th of June. A level that would make sense, yeah, just the most obvious one for another lower low would be the 16.9k level. That is the 78.6% Fibonacci retracement level. So we'll start with the bullish scenario, then we take a look at the bearish one. Again, the bearish one is my primary expectation just because, first of all, I don't think we have enough volume. We have a slight increase in volume in June compared to May. And also in July it continues, but it's not enough. Yeah, it actually has dropped off a little bit again in July. However, you know, we can count this impulsively and there is a potential that the low could already be in. As I said, you know, there usually is, especially in the current circumstances, a bullish and a bearish scenario. It's always important to be prepared for both ways, for both scenarios. You need to be, otherwise you need to have a crystal ball that I don't have at the moment. This obviously, you know, until we reached here the target area below 28.6k, there was pretty much only a bearish scenario for me because it was clear to me that we had to make that low below 28.6k. If we look at the bigger picture here for Bitcoin, this ABC correction had to go, they had to end below the low of the wave A. Yeah, that was always the view. And therefore, since November, I've been talking about lower prices clearly. And when we then finally hit that target area, then we had to start to look for bullish options. And this is exactly what we're doing. Yeah. Also keep it more interesting, of course, but definitely also to observe what's going on here. So currently, we can count here a wave 1 to the upside into June 22. Then, the 26th of June, then a wave 2 to the downside with a low at 18.6k. We could now be still in that wave 3 in purple. Within the wave 3, we probably have seen a wave 1 and a 2, another 1, 2, and another 1, 2. Now, 3, 1, 2 setups is already a bit, painful. Yeah, not a big fan of that, not a big friend of that. It just means we have a little bit too many. Yeah. So this could be super bullish, or it could just be an indication that this is just a corrective wave up, which would be in line with my primary expectation, the bearish scenario. Because if you have too many 1-2s, you have a lot of overlaps, a lot of retracements. That is just usually not bullish. You basically have a small rally here that is sold off all the time. So the bears selling into the rally. So this is not a clearly bullish scenario. However, we can count this bullish. And we would then be consequentially here in this wave 3. We would need to move higher. This is currently not happening yet. Yes, we are making higher lows, but it's not really going up very strongly. What is an important level for a possible breakout? Well, it is this 20.4k level. It's a bit of a range, yeah, possibly going all the way up to 20.47k here. Yeah, and then we've got the wicks here, so it's a bit of a difficult one. But it's definitely a range and we would need to break substantially above the 20.4k, which means we shouldn't just do something like what we did here yesterday. No, what we want to do, we want to move up and retest successfully, something like that. And then when you see a green candle here, that means we could push up all the way to here, 21.3 and go through. This would be a substantial breakout. That retest would basically confirm that. So where could we be now? Yeah, so I currently wouldn't rule out that this wave 2 here in green that you can see here with a swing low at 19.74k, that this is already the low of the wave 2. I wouldn't rule out that we go lower. Reason for that is, first of all, let's take a look at the retracements again for that wave 2 low. It did come down to 61.8, which is an ideal level for the wave 2. But another ideal level would be the 78.6% fib level, for example. And I wouldn't be surprised to pull back once more to that ascending trend line that we have on the chart here. And also, I can't really count clearly a 3-wave move down. So the wave 2 would obviously consist of an ABC. And I can't really count that. It would make more sense for me to have this as an A and a B and a C. Especially as what I have labeled here as the wave B is not clearly impulsive. Because it is not clearly impulsive, it is with a higher likelihood corrective and would therefore with a higher likelihood result in a wave C. Best evidence that we are breaking out to the upside is that substantial breakout above 20.4K. In that case, I would say, okay, maybe wave 2 was already finished, but I would actually say that, yeah, we can assume that wave 2 will make actually a lower low, which means overall the wave 2 will end somewhere here. And again, target for that would be here the 78.6% fib level absolutely at 19.6K is one that makes sense. Possibly even 19.45K, that's the 88.7% fib level. A level we don't want to get below is 19.3K. That would invalidate this imminent uptrend here. Then we could still go to the higher level one, but as soon as we take out 18.6, this uptrend is over, and then I think we are falling into the bearish scenario that we're going to talk about in a minute. So yeah, A, B, C, I think is what we can expect before we then move higher. But again, then you have a 1, 2, 1, 2, 1, 2. It's just a bit too, yeah, it's getting a bit critical, and the market just doesn't seem to be pushing up. But this is exactly what we see here at the moment on the chart. So these are the key levels that I just gave you in the bullish scenario. And if we then make that lower low in the wave 2, or maybe we go up straight away, that depends on the breakout. The target here, the imminent target for that wave 3 in green belonging to that wave, yeah, that would be here at around 22.1K. So it would need to blast through this red resistance box. So if this is a wave B here, what would, in terms of the retracement, how high can it actually go? And we can take a look at that. So we've got here, we touched perfectly the 61.8% fib level. That is actually, if we say that is, let me just put that on the chart again, that is indeed an A, a B, and a C, yeah, then, you have here a possible reversal point from 20.35K. This is an ideal retracement level for a wave B. Wouldn't be surprised if it turns to the downside from here. We're currently finding also a little bit of resistance here. And however, if we go a bit higher, we have no problem to go higher. We could even go to the 78.6 or the 88.7. A wave B is very, very difficult to forecast and also to trade. But it could end now, and we could reverse down in that C wave. But here, 20.35 would normally be what you would expect for a wave B, the 61.8% fib level, 20.35 as a possible reversal point for anybody who might want to short that. But again, that is high risk at the moment, and that is just one trade setup idea. But let's take a look at the bearish wave count, which is still ongoing here, still unfolding, no change to the bearish wave count, which I already explained to you in the previous video, where we came down here on the 18th of June in a wave 3, we moved up in a wave 4, and we then unfolded here in a 1-2, 1-2. And in this wave 2, we should not move above 20.9K. If we go above that, it would not be bullish yet. It would only get more bullish above 21.9K. So, and from here then, from that wave 2 high, which could have found its high already, that would, yesterday I already showed you here this pennant, this triangle trend continuation pattern actually, which in my opinion confirms my rather bearish view still on Bitcoin. Even though we are tracking the bullish scenario, please don't mix it up. We are tracking the bullish scenario, but that doesn't mean I am bullish. I am considering the bullish option. I think that is the best we can do at the moment until certain levels are broken. But here I showed you yesterday that pennant could be a bear pennant, and the reversal here, it is, you know, it works out with that other scenario as well. We approached resistance here. Yeah, we approached resistance and could now start to move down from here in a wave 3. A breakout of the triangle is also possible. Again, wouldn't be bullish necessarily, but could lead to some upside. But again, we want to see the break of that 20.4K level, yeah, that I mentioned in the bullish scenario to get more bullish. But we can see on the bearish scenario here that triangle actually, and that yeah, is more, you know, sort of rather trend continuation pattern that could solve itself bearish to the downside. And that's where we are. And then we would move down in a wave 3, move up in a 4, move down in a 5. That would possibly only complete the wave 3 here in red. Then we have a 4 up, a 5 down. And however, first key support, if we make a lower low, will be that 16.9K level, which is a 78.6% fib level. Then we take a look at how the market is reacting to that level, and then we can make further, come to further conclusions. Thanks a lot for watching. Yeah, hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, check out the channel membership. And then, yeah, see you in the next video. Bye-bye.